Let's dig further into Robinhood and whether this debut, what it reveals about the current IPO market, maybe market sentiment more broadly. Joining me is Dan Primack. He's the business editor at Axios. All right, so Dan, Robinhood shares are down about 5% right now. What's going through your mind?
I mean, it's funny that Nelson talked about there being some IPO fatigue. What I think we're seeing is that investors are really treating each company very individually and very separately, right? Because we have Duolingo goes public yesterday. It does extraordinarily well. It's off a little bit today, but it does great yesterday. Today, you were supposed to have something called Clarios, which is this battery maker. That was also a huge IPO. It was going to raise about $1.7 billion. They pulled it this morning, or at least postponed it. They said, quote, market conditions. So really, this isn't about lots of IPOs all doing well or all doing badly as a bucket. It seems very company specific.
We also had Traeger debut today. Last check, the shares are up about 20%. Yes, that's the grill company. We've talked about it and Weber listing a couple of weeks back. So, there are obviously, you could look at this market and say, well, that's a great indication of one that's going off pretty well. Robinhood, Dan, I also wonder if its timing comes as companies are reporting a little bit of pandemic hangover. We had UPS down big this week as volumes are flattening out. Robinhood, you could argue, is a pandemic trade. Is this timing just working against it to some extent? Even though Delta's back, but there's just this sense that this is not anything like what it was, obviously, in the depths of 2020.
It may be. I mean, for starters, we should realize, yes, Robinhood is not, this blockbuster IPO right now. It's not having a huge pop, and it's down from where it priced the shares. That said, it is still worth a lot more. The public markets have validated the private market valuations from, just earlier this year and then some. So, and it did raise, $1.8 billion or something. That's really important. I think the bigger question for Robinhood is people, I think, are a little confused about, or not confused, are concerned about what the business is going to be, say, in a year from now. So, for example, a huge amount of its revenue comes from payment for order flow, which has been, discussed and we've discussed before. There is talk from the SEC, from Gary Gensler, from Congress about limiting payment for order flow. And even Robinhood has talked about maybe becoming more of a market maker. Well, those could be very big fundamental shifts to the business. And then there's obviously the crypto piece. When you look at their crypto assets, how much of that was driven by Dogecoin, and no one knows where that's going to be in a year. So I think there's some, Traeger is going to be making grills in a year. People aren't necessarily sure what Robinhood will be in a year.
That's a great point. So let's also talk about the pricing and the differences in this IPO versus some of the others. There was some sort of talk in the market that they were trying to price it low to make sure that they had this nice one-day pop, and retail would participate in that. And interestingly, Leslie, who we just spoke with, was reporting that even the retail share was not they didn't see demand come in as strong as they might have thought. So I think they were offering 20 to 35% of the shares to retail, and maybe it was on the lower end of that, which is where the real demand came in. And again, the retail public, who they're trying to sort of, specify here, is still upset with them about what happened at GameStop. They remember the outages last year. We often talk about Robinhood like it's a proxy for the Reddit trade. That's not necessarily the case.
No, and it's interesting. If you look at Reddit and you look at some of these message boards, Robinhood is being savaged. In fact, it seems that some of these folks are taking some great glee in this IPO not going as well as Robinhood had wanted. And you said the GameStop stuff last year. It's GameStop stuff from 6 months ago. It's recent. It's really recent. And you're right. I think just because you use Robinhood to buy and sell stocks doesn't mean you don't necessarily want to, take a shot at them. A lot of us use products and we don't particularly love the maker of those products. That might be true in this case.
I also think if they were the only ones still offering commission-free trading, that is a huge competitive advantage. Obviously, a lot of the rest of the space has caught up to them. They do have a very impressive, easy-to-use app, which is why they get critics like Charlie Munger, all the rest of Scott Galloway, who say it's too addictive. It encourages the wrong kind of trading. So even where they most succeed, they have critics of the app interface that they've designed. And you wonder who might be waiting in the wings, maybe seeing what happens with the pay-for-order flow model. But, is even a well-designed app a moat in the long run?
I don't know if it's a moat. I mean, the question is, what does Robinhood do next in terms of innovation? And I think kind of on the bull case of that, you'd say, well, they were ahead of everybody else on not just no-fee trading, but also on the UI, on the interface. So, they were the smartest guys in the room to a certain extent. They saw what was coming next, and maybe they can, do that again. And I think that would be the bull case on this when it comes to that.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.